While equity investment is certainly very rewarding in the long run, the fact is it is also very volatile in the short term. The recent correction in stock market in 2025 has taught a very good lesson that it's very important to have the right asset allocation with fine balance across equity and debt instruments. Since debt instruments are less volatile, it provides a good stability to the overall portfolio. Plus, debt instruments are very helpful in case of short-term financial goals. For instance, if you have a goal of buying a car in next 1 year, you should not keep your money in equity as returns can also be negative in the short term. For this, you can consider investing in debt instruments or fixed income instruments. And that's where in today's video, I want to discuss how you can navigate the volatility in 2025 with some exposure in bonds that offer a fixed return which is higher than FD and lower volatility than equity. There are two reasons why it makes sense to consider bond investment in 2025. First is equity market has been very volatile. So bond investment would provide some stability to your portfolio. And second, high interest rates. Just to give you a comparative analysis, if you invest rupees 5 lakh in FD at 8% interest rate versus bond at 11.5% rate, after 10 years you will end up fetching 10.79 lakh rupees in FD and bond value would be 14.84 lakh rupee. So this additional 2-3% return from bond creates a significant difference due to compounding. Please note that currently the interest rate in India are at higher levels. As a result, bond instruments are also offering higher yields. However, RBI is soon planning to cut the repo rate. In that case, the interest rates would fall and eventually the bond yield would also reduce. Now, bond investing in India is not very popular. One of the key reasons is lack of awareness about how exactly bond investing works. And that's where in today's video, I'll help you understand what is bond, how it works, various types of bonds, what are the risk and return expectation, and how you should select the right bond for investment. And then we'll discuss how you can use a platform called Wint Wealth, which is our partner in today's video, to invest in bonds that offer fixed return in the range of 9 to 12%. Towards the end, we'll also discuss the strategy to invest in bonds. So watch this video till the end. Alright, let's get started. In simple language, bond is nothing but a type of loan. So just like you and me take loan for buying a car or a house or for education, companies borrow money to run their business. Now companies mainly have two ways to raise capital. First way is by diluting their equity. So basically, let's say a company is worth 100 crore rupees and has got 1 crore shares, so it can sell 20 lakh shares to raise 20 crore rupees. On the other hand, a company can issue bonds where the company would pay a fixed interest to the borrowers along with the principal amount. The benefit with issuing bond is that company does not have to dilute its equity. And the benefit from an investor point of view is that if you invest in those bonds, you get a fixed return which is generally higher than FD returns. Here please note that every bond has a different coupon rate, that is interest rate. Some bonds might offer lower interest rate while some might offer higher interest. This interest rate offering would majorly depend upon the credit rating of the company. If the credit rating is higher, the interest rate would be lower because a high credit rating means company has a good history of repayment. So the default risk is very low. Obviously, if the risk is on lower side, interest rate would also be on the lower side. And as the credit rating decreases, interest rate increases. So basically, higher the risk, higher the return, and lower the risk, lower the return. Now there are multiple credit rating agencies like CRISIL, CARE, ICRA that rates the company and its bond. For example, this slide shows the credit rating from CRISIL and CARE, where AAA means highest safety and lowest risk, AA means high safety and low risk, A means adequate safety and moderate risk, BBB means moderate safety and high risk, and it goes all the way till C, which is near default and extremely risky, and D, that is default and no repayment ability. So make sure that you clearly understand the risk and returns while investing in the bond. Then every bond has a different interest payment schedule. Some bonds offer monthly interest payment, some offer quarterly interest, while some offer annual interest. But your principal amount would be given on the date of maturity. For example, if you have invested in a bond with maturity of 1 year with a monthly interest payment, then you will get your interest on a monthly basis, but your principal amount would be repaid on the date of maturity, that is after completion of 1 year. Although you also have an option of partial repayment of principal in an amortized form. It means you won't have to wait till the last date of your bond maturity to get your entire principal amount. You get both interest and principal in a fixed interval. Make sure that you clearly understand the interest payment schedule while investing in bond. Now let us look at various types of bonds. So there are mainly two types of bonds, secured and unsecured bonds. Secured bond means the bond is secured against the asset. It is basically the collateral. Just like when we take a loan, we keep our asset like home or gold as collateral. Likewise, with secured bond, companies keep their assets as collateral. So in case the company fails, bondholders have a claim on the collateral. It means the risk is on the lower side. Unsecured bond means the bond is not secured against any asset of the company. It means in case the company goes bankrupt, the recovery for bondholders may be very less. Now obviously unsecured bonds are more riskier than secured bonds. But in order to compensate for the higher risk, unsecured bond offers higher interest rates. So while investing in a bond, you should check whether it's a secured bond or unsecured bond. Try to avoid unsecured bonds as it can be very risky. Now let us look at how you can use Wint Wealth platform to invest in bonds. So Wint Wealth is a platform that is trying to solve some of the common challenges with bond investment in India. First challenge is ticket size. Ticket size is basically the amount of money that investors can invest in bonds. Earlier the ticket size on bond was as high as 5 lakh rupee to 10 lakh rupee. So it was not really possible for a retail investor to invest in such high ticket bonds. Wint Wealth has reduced it to as low as 10,000 rupee. Second challenge was lack of secured bonds. So as we discussed, secured bonds are backed against the assets and safer than unsecured bonds, but there was a lack of platform that offered secured bonds in India. Wint Wealth is solving this problem as well. Third and the biggest challenge is lack of clear information. Wint Wealth team studies the business of the company and based on that, it cherry picks the company for which it wants to raise money via bonds. Plus, they share a lot of detail related to the company so that you can take an informed decision. Not only that, Wint Wealth co-invest in the company's bond up to 2% along with you to ensure that they have skin in the game. Now let us look at Wint Wealth platform and understand how you can invest in bonds. So once you open Wint Wealth website, you see this homepage that says invest in bonds with 9 to 12% fixed return. And it is SEBI regulated and you can start with 10,000 rupee. It has got 4.7 star rating on both iOS and Google Play. Then if you scroll down, you can see various bonds that are available. So once you log in, you see this kind of page and here you can see view all option where you can explore all the bonds that are available. At present, there are 14 bonds that are live and there are 65 bonds that are fully repaid and 70 bonds have been sold out. So what all are the live bonds available for investment? You can see all the details here. There are multiple bonds available. So let's explore Muthoot Capital bond and here you can see all the details. For example, its yield to maturity is 11%. You can understand what exactly is that. Then maturity left is 19 months. Minimum investment is 10,000 rupee. Then you can see the schedule of repayment, right? So once you invest your money, how and when you will get the interest and when you will get the principal amount. Then next important thing is it is A plus rated bond. So again, that is a very important aspect that it is one of the top rated bonds and other details like it has got 1.1 times security cover. Vehicle loan is two-wheeler loan, right? So it's backed with basically it's a vehicle loan company which is mainly into two-wheeler loan and 2% of Wint Wealth Group has invested in this NBFC. Right, and then there are various other details. For example, what all are the risk and comfort? So again, this is a very interesting section where they mention what they like and what are the risks. So what they like is, for example, comfortable capitalization. So Muthoot Capital is adequately capitalized and then you can see other details like there's a debt to equity ratio of 3.94, experienced management, and third what they like is companies get strong support from Muthoot Papachan Group in operation and management. And then the risk include your modest asset quality and profitability and focused in southern India. So this particular section would help you understand what is good about the company and what are the risks that you should keep in mind. Apart from this, there are other details like taxation. So there's a 10% TDS, that is deducted on interest, and there are various other bond related details. For example, collateral size is 1.1 times, then issue size is 16 crore. We have already seen it has got A plus stable CRISIL rating, and apart from that, various other details that you can go through, right? So basically you can go through all the details before investing your money. Now the next question is, how do you invest? So very simple, you can see the number of units that you can select. So 1 unit is this is the 10,000 rupee, 2 units, 3 units. Likewise, you can select, click on, obviously you have to do your KYC, and once you are done, just click on invest now, proceed to payment, and you are done, right? So very simple process. This is one particular bond we have seen. In fact, there are even bonds with minimum investment of 1,000. For example, Navi Feb 25 particular bond has got a minimum investment of 1,000 rupee only, and again it is A rated bond, right? So these are some of the details that you can go through on Wint Wealth platform, and based on that you can decide which bond you want to invest in. Now let us look at the final part of this video, that is investment strategy. First of all, if you are new to the world of bond investment, I would suggest starting slow. Invest with a small amount, and once you build a trust, you can increase your investment amount. Second, you can diversify your money by investing in bonds across multiple sectors. For example, Muthoot Capital is backed by vehicle loan, Vartana is backed by school loan, Moneywise is backed by gold loan, Argo is backed by MSME loan, IIFL Samasta is backed by microfinance loan. This way you won't be exposed to any single sector and will reduce your risk significantly. So in this video, we discussed various aspects of bond investing and its role in financial planning. As an investor, it's very important to have a right asset allocation with fine balance across equity and debt. And that's where bond investment can play an important role. Then we looked at how you can use Wint Wealth platform to invest in bonds. And finally, we discussed the investment strategy by diversifying in bonds across multiple sectors that can help you with balancing risk, liquidity, and return. In case you want to explore Wint Wealth platform, I have provided the link in the pinned comment. If you find this video useful, do share it with your friends. Also, if you have any question, do let me know in the comments. I'll see you in the next video. Till then, take care.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and/or default in payment. Read all the offer-related documents carefully.